Good afternoon. It's Jeffrey Christian of CPM Group. It's about 12:40, 12:45 on the afternoon of Tuesday, the 22nd of July here in New York. Uh, Going to run through current gold, silver, platinum, palladium markets and talk about the rationale for commenting on comments. There actually is a real reason why there's value there. Gold prices have spiked up this afternoon, or late morning, early afternoon. The price was starting the day relatively up $7, $9, but as of a few minutes ago, the price had spiked up $37 and it was $3,443.90 for the active August contract. We had been saying that we thought that it would hit $3,400 and probably go up to test $3,500 by late July, early August. And that seems to be what's going on. There is a raft of political and economic issues that are worrying investors, and politicians around the world are working very hard to convince investors that they probably should have more of their money in gold and silver. We are moving toward the active August Comex contract. As of Friday, the last time for which data was available, there were 21.2 million ounces of open interest in the August contract. There were 20.2 million ounces of Comex registered inventories, another 17 million ounces in eligible inventories, for a total of 37.2 million ounces of total reported inventories, excluding the pledged inventory metal that is in Comex registered depositories but is pledged, or what some people would say hypothecated, cannot be used to deliver into Comex. That's about 2 million ounces of gold that meets Comex specs, but it has nothing to do with Comex, and it is used in other ways by the owners of that metal. The Comex, however, does have the depositories report it because it's there. So you've got a lot of silver, gold, even without the pledge metal. You have 37 million ounces. Delivery in the August contract probably will not have a major disruptive effect on gold prices. It probably will not push gold prices sharply higher in and of itself. However, as I said, we have a number of growing political and economic issues that probably will continue to convince investors to buy more gold and silver over the course of August. Things do not look like they're getting better in terms of economic and political certainty and stability. So our expectation is that the price of gold probably reaches $3,500 within the next few weeks. And in fact, in our early July precious metals advisory, we were suggesting that a spike as high as $3,600 sometime in August and September is absolutely not out of the question. That's in our main scenario. So that's our expectation for the gold price going forward. Silver prices, they're up 24 cents. They haven't risen as sharply as gold late morning, early afternoon today, but they are at $39.57. That's up 24 cents from where it was at yesterday's settlement, but it's actually roughly unchanged from where it was last Friday, the last time we did a video, and it had these prices on there. Platinum prices, they're off $12 from where they were yesterday at the settlement, but they are maybe off 60 cents or so from where they were at the end of business on Friday. They are nonetheless very sharply higher than they have been for many years. They're back at levels they got over $1,504 on Friday, came back off a little bit yesterday, came back up. They got up to 1,502 yesterday, came back off, or 1,502 today, this morning, but they have backed off since then, and they're off $12 from yesterday's settlement. They are, as you can see on the left-hand side chart, platinum prices are sharply higher than they have been for a couple of years. They look overbought And in the right-hand chart, you can see that they are sharply higher than they've been at any point since 2014. They look overbought. A lot of the upward pressure since the beginning of June has been speculative buying and investor buying and buying for inventories. People were trading off of a marketing document that came out in last May. They got all hyped up. They were convinced that platinum jewelry was skyrocketing in China. It's not, it's rising. Maybe 1 or 2 tons additional platinum, silver jewelry being used last year. Maybe less this year due to the higher prices and worsening economic conditions, disposable income, economic uncertainty within China. Imports of platinum bullion into China had risen sharply earlier in the year. That helped stimulate that speculative buying and bullishness. Most of the platinum that has been imported has shown up in market inventories as opposed to going off into investor holdings or jewelry or other fabricated products. So again, it doesn't look like there's a very strong fundamental basis for the higher prices. And platinum imports did decline in June from where they were in May. I think they were off about 6%. So our expectation is still that the platinum price will come off at some point, probably over the next 2 or 3 months. And palladium also has risen. It's risen to its highest level since the middle of 2023. It's off sharply from where it was in 2020 through 2022. Our expectation is that it doesn't get back to those higher levels, but rather falls back over the next 3 months or within the next 3 months, as it seems to be primarily driven by speculative buying, investment demand, and inventory building by trading companies. I want to talk about some of the comments we've got. Last week, I took time out to talk about some of the comments that come in and to respond to some of them and to point out the intellectually and logical insupportability of some of the comments that people have and religiously hold in relationship to gold and silver. Of course, a lot of the true believers posted nasty little things about me in response to that. And a lot of people said, Jeff, you should ignore those people. And I even said in my video, as Eliza Schlesinger, the comedian, said, we all know you shouldn't read the comments and you shouldn't pay attention to them, but we all do. Well, there actually are 3 reasons that you should pay attention to some of the comments that people make about you. The first one is this philosophical concept that all people's opinions deserve consideration, even if they're half-witted. And that's true. All people's opinions do deserve consideration. The second is that there are good comments that come through. They help us target our topics and they help sharpen our view. We actually enjoy getting responses from other people. Several requests have been made over the years for us to more carefully explain futures markets. I'm not sure what exactly people want, but some of it we have explained in past videos. It's a very complex subject. I'm not sure if they want the financial information, the mechanics, the origins. We've explained a lot of that in past videos. And to do a full-fledged presentation on what futures markets are, how they operate, why they exist, would take a long time. I remember a true believer way back in like 1999 or 2000 asking me how it could possibly be that we have subsidies on agricultural products, and when did the governments start agricultural subsidies? And I explained that they at least went back to ancient Egypt, and it had to do with the need to preserve food supply stabilities for the population. So yeah, I could spend a semester in a coursework on this, but that's not the purpose of these videos. There are also some things that we don't give away for free. We're not a marketing group. We're not supported by sellers. Some of our clients are sellers. Most of our clients are buyers, investors, fabricators, central banks. We are a research and consulting company, and our product is research and consulting and information. That's how we generate revenue to keep ourselves going. And so there are some things that we simply won't say for free on the internet. It's behind the paywall, as companies say. And there is a third reason, the value of off-base comments. It lets us know what people need to work on. So I want to talk a little bit about all of those things now. Helping people only helps if people help themselves. I had a person I worked with at the World Bank, Takamasa Akiyama. He and I co-authored what a lot of people consider the best paper on commodities price risk management, hedging, back in the 1990s. And after he retired from the World Bank, he went back to Japan and he worked for a government agency. He was doing research on the question, does government aid to developing countries help developing countries? He was back in New York and we had lunch one day and I said, so what is your conclusion? And he said, aid helps those that aid themselves. And that's definitely true. It's true on a government-to-government basis, a country-to-country basis, and it's true on an individual basis. Now, there are often repeated inaccurate comments that CPM Group never addresses certain issues in the market, conspiracies and manipulation and the fines that banks make for non-supervision of traders who spoof markets. And let me stop right there. People talk about JP Morgan and Barclays Bank and other banks being fined for manipulating the markets. But that's actually slander. Most of those banks have been fined. Some of them have been fined for that, but not JP Morgan and not Barclays Bank. They were fined for non-supervision of traders who were doing bad things in the market. The same way that Drexel Burnham was fined for non-supervision of Ted Butler in the 1980s when Ted Butler was using client funds to try to manipulate the frozen and concentrated orange juice market. Non-supervision is not actually spoofing markets or trying to suppress the price or manipulate the price, right? So don't be a slanderer. Accuse JP Morgan of non-supervision and allowing those traders to spoof the markets. You got to know what you're talking about if you're going to talk and not be laughed at. It's just the way it is. I'm sorry. The reality is that CPM Group has covered these things, these inaccurate accusations, this nonsensical stuff about price suppression. I searched CPM market manipulations on the internet on Saturday. And within 5 minutes, I had collected numerous past videos and speeches dating back as far as 2008 that CPM Group has posted on YouTube that totaled more than 4 hours of video time squandered in my mind, dispelling conspiracy theories, exposing fraudulent experts, and more. So anybody who says, hey, CPM Group never covered these things is wrong. And they're displaying a lack of knowledge about CPM Group and that which they're talking about. We can't help you if you don't help yourself. If I could find 4 hours of educational programming in 5 minutes, you should be able to find 5 minutes on your busy schedule to undertake even such a superficial search and find those things that we talked ad nauseum about and that we really don't care to talk about because we'd rather talk about what's really important to the market, including the fact that at current gold and silver prices, major bullion trading banks are going to be reporting record profits in their commodities trading because they actually make money when the price rises And for them to be suppressing the prices would be to be acting in their own worst interest. And banks, unlike some investors, try not to act in their own worst interest. They try to act in their own best interest. So here's one link actually to our website where we have posted various counter arguments, not only from us, but also from the CFTC regarding silver. The CFTC has done 2 or 3 studies over the last several decades. We've posted 2 of them, I think, as well as other things. And you can find all sorts of other stuff on the internet, but you gotta look for it. Now, there is a value also in looking at and understanding and considering off-based items. Yeah, one commentator wrote that 90% of the precious metals investors do believe in silver conspiracy theories, and CPM Group is making a fool of itself to those people, to 90% of the precious metals investors, by saying it doesn't exist. Actually, 90% of the precious metals investors do not believe in silver price suppression conspiracies. Surveys for decades and recently have repeatedly shown that more than 90% of the precious metals investors do not believe in price suppression conspiracies and see them as off-base fringe commentary. And we get more comments saying, Jeff, stop wasting our time and your time talking about these things and focus on what's important. Then we do get these things like, hey, you never talk about it. These investors, and we know because a lot of most of our income comes from in the investor sector. Now, these investors joke about how incongruous it is for someone who says he or she believes in this all-powerful suppression conspiracy that's kept gold or silver prices artificially low for years, for decades, and yet continues to buy gold and silver in the expectation of higher prices. If there is this enormous global conspiracy to suppress prices and successfully done it for decades, you'd be foolish to buy gold and silver expecting the price to rise if you wanted to make money. These investors also know that there are profits that can be made by investing in the ultimate rebounds that occur when the conspiracy believers periodically blow out of the market. In 1981, I met one of the smartest investors, most successful investors I have ever met in my entire life. And as we were shaking hands, he said to me, I want you to know that I don't believe gold is an investment. I think it's a religion. And I said to him, I think that for many people, gold is a religion. But we've done a lot of quantitative research and analysis, and I think that we've proven that you can invest in gold profitably, even though the market is populated or polluted with a lot of believers. It's true in 1981, and it's true now. And a lot of investors know that when you see the true believers doing one thing and pushing the price higher or lower, it's time to find the reflex and position yourself to take profits and to profit from the ultimate rebound from that bad behavior. So there is a value in paying attention to the off-based comments, and you know what people to look for. Now, another BS alarm to watch out for. When people talk about X just reset the gold price, or X is just about to reset the gold price or the dollar, and X can be the People's Bank of China or George Soros or the U.S. Treasury. But you hear this all the time. What does it mean to reset the gold price, the dollar's value, or anything else that is, in fact, market determined? The gold price is determined in the market, moment to moment, by hundreds of thousands of participants around the world buying and selling gold. If you want to reset the gold price, it doesn't matter even if you're the U.S. Treasury. U.S. Treasury comes out and says, hey, we're going to reset the gold price to $40,000. People say, that's great. That's great. I'll sell you my gold for $40,000. Yeah. And Treasury says, well, no, because I can buy the gold in the market for $3,450. Why would I pay $40,000 for it? Oh, so you're resetting your gold price at $40,000, but the market is still $3,450. Yeah. And unilateral resetting of the gold price is just, it doesn't happen that way. So when people start talking about the coming reset of the gold price of the dollar, you can tune them out. It doesn't make sense. Now, I want to end this on a good comment. And there was a good comment a week or so ago related to CPM Group's projections on precious metals prices. We have been projecting for many years now that the gold and silver prices might peak sometime 2024 to 2027. As time has passed, 2024 came and we said prices are rising, but this isn't the peak. 2025 is here. Gold prices, silver prices are rising. And we have said repeatedly, yes, gold prices and silver prices are rising, but this is not the peak. We think the peak is sometime in 26, 27, right? But then you say, okay, if that's the peak and the prices come off, what is it that we're predicating our expectation that there'll be a reduction of investment demand in those years, in the next few years, given what's going to happen in the political and economic environment that stimulates investment demand, that's going to cause investors to say, ooh, I can exhale. I can stop buying as much gold and silver as I have been, right? In other words, under what circumstances would we see a reduction in political risks? What's, to quote the comment, what is your belief that the political climate normalizes without a hard reset? And I have to say, what I've written here. First off, we can talk about how that could happen. And it could happen. And it's been our main scenario for many years that it would happen. But we're not looking for a fix of the economic and political problems. We're looking at a reduction in financial markets' concerns about the level of political and economic uncertainties and risks, right? Note that I did not preclude a hard reset or a major violent political resolution to the current problems. What we've been talking about and continue to expect is that by 2027 or 2028, you may see the financial markets back away from the amount of gold and silver they would be buying, even if they're continued to be concerned about ongoing and worsening economic and political problems. And those economic and political problems may not go away, but they may not worsen beyond 2027, 2028. We really don't know. We're running all kinds of scenarios. So there are all kinds of scenarios where you don't have a hard reset, but investors back away from buying as much gold and silver. Another aspect is the probability rating. We rate the probability of all the different scenarios we run. And in our work, CPM Group has reduced the probability of this most likely scenario, and we've increased the probability of more hostile economic and political conditions pushing gold and silver prices higher. It's not necessarily your hard reset, but maybe much worse than any best case scenario would be. And I have to say, we're not alone in increasing the probability of more hostile and economic political conditions on a long-term basis. You're finding those kinds of scenarios gaining probability with the World Bank, the IMF, the OECD, legitimate financial institutions, independent research organizations, foreign affairs, the Council for Foreign Relations, generalist economists you can respect who have actually been right. So we're in this category of mainstream thinkers who are saying, yes, things could calm down, normalize, reduce the risks and uncertainties over the next several years. But the probability of that has declined, and the probability of something worse than that has increased over the last year. And that's why we've seen the gold price and the silver price rise sharply over the past year. And whether or not it continues, we're going to have to wait and see. There are entities in the world, powerful entities in the world, that would like to see things get worse over the next couple years and continue to get worse for everybody else. And in that kind of environment, you would see gold and silver prices continuing to rise beyond 2026, 2027, which is why one of the things that we've seen over the last 12 months is a number of our investors, wealthy investors, high net worth individuals, family offices, institutional investors, who had been looking for gold and silver prices, $39, $40, $45 an ounce, for silver, $3,000, $3,500, $4,000 for gold. And they're getting to those targets. And rather than saying, okay, I have this long-term position and I'm extremely profitable in it, and it's time to take profits, instead of saying that, they're saying, I have this long-term position, but I'm not ready to sell my gold and silver. Let's put hedges in place. And maybe those hedges are 12-month long, or maybe those hedges are 24 months long. But I want to protect myself if the prices do fall. But I'm not ready to give up my core insurance policy of gold and silver. And I'm in that group too. And it's funny, and maybe it's a little bit sad. If I look at my average net acquisition price for gold, it's less than $1,000. For silver, it's less than $10. Yeah. So I have a long way to go before my gold and silver is at a loss. But I haven't been buying at these kinds of prices. If I hadn't been buying below $10 silver and $1,000 gold, I'd probably be buying now. But I'd be buying in a hedge basis. So very good comment, the kind of comment we like to see, something that says, hey, here's a substantive question that you can put your teeth into that we all should know about. This is what's important for longer-term investors and longer-term profitability in gold and silver. That's all I have for now. Take care of yourself. Take care of those around you. You can go to our website. We will be launching our Platinum Group Metal Yearbook on the last Tuesday of July. You can go to our website, cpmgroup.com, and you can register for the online briefing and PGM market review that we will have when we release the yearbook. It's free to register for the briefing. You can pre-order the yearbook at $160. You can order the gold or silver 2025 yearbooks. They're out already. They're available for automatic, immediate download as ebooks. You can see what else you could do in terms of buying research from CPM Group. And you can send us a note at info@cpmgroup.com saying, yes, I'd like to talk to you guys about how you can help us more intelligently invest in gold, silver, platinum group metals, and other commodities. Again, take care of yourself, take care of those around you, try to do something good for the world, and we'll talk to you in a few days.